Jai and everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today marks part 2 of my Path to the Corner Office series for overseas posting examination questions and their corresponding sample answers for bankers. What is a foreign currency convertible bond? FCCB. Answer. An FCCB is a type of bond issued in foreign currency that can be converted into equity shares of the issuing company after a predetermined period. These bonds help Indian companies raise funds from international markets. What is the primary function of the Export Credit Guarantee Corporation? ECGC. Answer. ECGC provides insurance and risk cover to exporters against non-payment risks due to default or insolvency of the foreign buyer. It helps boost export trade by reducing financial risk. What are FEMA and FERA? How are they different? Answer. FERA, Foreign Exchange Regulation Act, 1973, a strict law aimed at controlling foreign exchange transactions. FEMA, Foreign Exchange Management Act, 1999, a liberalized law replacing FERA aimed at managing and facilitating foreign exchange transactions rather than controlling them. Key differences. Nature. For FERA, regulatory. For FEMA, facilitative. Violation. For FERA, criminal offense. Violation for FEMA, civil offense. Objective for FERA, restriction on forex transactions. Objective for FEMA, management of forex transactions. What is the purpose of the real-time gross settlement RTGS system? Answer. RTGS is a system for real-time high-value fund transfers between banks. Transactions are settled instantly on a gross basis, meaning they are processed individually rather than in batches. Which of the following is not a valid international payment method? Option A, letter of credit, LC. Option B, bill of exchange. Option C, NEFT. Option D, SWIFT transfer. Answer. Option C, NEFT, National Electronic Funds Transfer, is a domestic payment system used within India and does not facilitate international transactions. What is an outward remittance? Answer. An outward remittance refers to sending money from India to another country, usually for purposes like education, medical treatment, investments, or foreign business transactions. What are the different types of letter of credit? LC. Answer. A. Revocable LC can be cancelled or modified by the issuing bank without prior notice. B. Irrevocable LC cannot be changed or cancelled without the consent of all parties. C. Confirmed LC. A second bank guarantees payment along with the issuing bank. D. Unconfirmed LC. Only the issuing bank guarantees payment. Revolving LC used for repeated transactions over a period of time. F. Standby LC acts as a financial guarantee in case of default. What is the role of correspondent banking in international trade? Answer. Correspondent banking refers to one bank providing services to another bank in a foreign country, facilitating cross-border transactions, trade finance, and remittances. Which of the following factors affect foreign exchange rates? Option A, inflation. Option B, interest rates. Option C, political stability. Option D, all of the above. Answer. Option D, all of the above. Foreign exchange rates are influenced by inflation, interest rates, economic growth, trade balance, political stability, and global market conditions. What is the purpose of the balance of payments? BOP report. Answer. The BOP is a financial statement that records a country's total economic transactions with the rest of the world over a specific period. It includes a current account, trade of goods and services, remittances. B. Capital account, investments, loans, and capital transfers. A BOP surplus indicates more inflow than outflow, while a deficit shows higher outflow than inflow. What is a foreign institutional investor? FII. Answer. FIIs are investment funds, hedge funds, or institutions that invest in a country's financial markets from abroad. They bring capital inflow but are subject to regulations. What is the impact of a strong rupee on Indian exports? Answer. A strong rupee makes Indian exports more expensive in the international market, reducing demand. Conversely, it makes imports cheaper. What is a foreign direct investment? FDI. Answer. FDI refers to investments made by foreign entities in business operations or infrastructure in another country. Example, Amazon investing in warehouses in India. What is the role of the RBI in regulating outward remittances? Answer. The RBI regulates outward remittances under the FEMA Act to ensure compliance with economic policies and prevent money laundering. It sets limits on remittances and requires documentation for certain transactions. What is the difference between an export bill and an import bill? Answer. Export bill. A bill prepared by an exporter demanding payment from an importer. Import bill. A bill received by an importer indicating the amount due for imported goods. What are the different types of remittances? Answer. Inward remittance. Money received from abroad. Example, an NRI sending money to India. Outward remittance. Money sent abroad from India. Example, a student paying for education overseas. What is the Liberalized Remittance Scheme? LRS. Answer. LRS allows resident individuals to remit up to USD to 2.5 lakh per financial year for purposes like education, medical expenses, investments, travel, etc. without RBI approval. What is the difference between an EEFC account and an RFC account? Answer. EEFC, Exchange Earners Foreign Currency Account, a foreign currency account for exporters to hold foreign exchange without conversion into INR. RFC, Resident Foreign Currency Account, for returning NRIs to keep their foreign earnings in foreign currency. What is an authorized dealer AD in foreign exchange? Answer. Authorized dealers ADs are banks or financial institutions authorized by RBI to deal in foreign exchange transactions. They are categorized as AD Category 1, commercial banks handling forex transactions. B. AD Category 2, smaller banks and financial institutions handling limited forex transactions. AD Category 3, specialized institutions dealing with currency exchanges. What is a foreign portfolio investment? FPI? Answer. FPI refers to investment in stocks, bonds, and other securities by foreign investors without direct control over business operations. What is an international bank account number? IBAN. Answer. IBAN is a standardized international bank account format used in European and Middle Eastern countries for identifying bank accounts globally. What is the role of the Financial Action Task Force, FATF? Answer. FATF is an international organization that combats money laundering and terrorist financing by setting global anti-money laundering AML guidelines. What is the difference between a forward contract and an option contract in Forex? Answer. Forward contract, a legally binding agreement to buy, sell foreign currency at a future date at a fixed rate. Option contract, a contract giving the right but not obligation to buy or sell foreign currency at a predetermined rate. Thank you very much for your patience. Request for like, share and subscribe.